Well, we had bonds trade pretty flat today. Yesterday's US holiday and the anticipation of UK Prime Minister Theresa May's speech contributing to low trading volumes in fixed income markets. Of course, that with May expected to give direction on the manner in which Brexit would be executed. And what's emerged? Well, Prime Minister Theresa May showing today that she has no interest in staying in the EU and wanting to develop a completely new relationship. And by the afternoon, the benchmark R186 government bond bid at 8.64%, as you can see there, from yesterday's 8.65%. The R207 in the meantime at 7.93% from 7.94% previously. We're joined on the line now by Wikus Furstenberg from Futuregrowth for more on what's been playing out in that space. Wikus, thanks so much for your time today. So let's start off with all that's been triggered by not only Prime Minister Theresa May, but President-elect Donald Trump as well on the currency scene, because that's where most of the impact has been felt when it comes to the kind of comments being delivered to the markets today.
No, certainly, Alicia. I mean, I think if we can start with the UK, and following a sort of announcement, the market jumped to the conclusion that in order for both houses of Parliament in the UK to approve the final Brexit deal, it has to be good. I mean, and obviously this caused the pound to gain against all the major currencies, and as you can see that the rand lost about 1.3% so far against the pound. And then in terms of the US dollar, a different story. Trump sort of making the point that he thinks it's too strong, and so there you go. So euro gaining against the US dollar, and the rand losing. The rand also gaining about 1.3% against the US dollar. I mean, and if you look at US bond market, I mean that also rallied about 5-6 basis points in the US, and again triggered by that. I think an overreaction by these markets to mostly the Trump view of where the dollar is. But that's where markets are at the moment.
And despite the rand strength that's filtered through, let's take a look at activity on the bond scene, because things are looking pretty flat today. So what kind of action played out at today's bond auction when it comes to interest being shown not only by local investors but from foreign participants as well?
Well, no fireworks at the second auction of the calendar year this morning. 3 stocks that were on offer cleared more or less at market, and that's more or less where the market is trading at the moment. I think mostly because, I mean, as you know, the market has rated about 30 basis points since the end of last year. So the index, all bond index, produced a total return of just around 2.5% already. So good returns, and I think we haven't seen much from the locals. And if you look at the foreign participation year to date, I don't have numbers for today yet, but for year to date, it's fairly flat in terms of the net number, although if you look at the gross number, it's around 22 billion.
Yeah, well, we have a bit of a data-full week this week, of course, anticipating retail sales tomorrow, CPI later this week as well, and that all ahead of the SARB's interest rate decision next week. What's some of your outlook on those fronts?
Well, we may start with the SARB meeting next week. We don't expect them to do anything to the policy rate. I don't think a lot has changed since the previous meeting in November. Market's a bit more volatile, but it doesn't have a direct impact on what they're supposed to be doing. That includes the CPI, next CPI number due for release this week. We expect the headline number to print 6.5% year on year, slightly down from the 6.6. So that was probably the peak in the current inflation cycle, and then of course CPI to trade somewhere around 5.7%. So not much action for the SARB from that point of view.
Yeah. When it comes to the ECB, also we're looking at interest rates being announced on that end this week. Wikus, given what's played out so far, do you see that influencing any decisions being made this week?
I would be very surprised if that happens, Alicia. I think, globally, it's more important to focus perhaps on the bigger trends. And I think globally, but specifically in the US, it's clear that inflation expectations are sort of lifting slowly and steadily, but surely. And that started even before the US elections in November. So in my mind, the big broader trend looking forward is more inflation, more fiscal spending, as opposed to the disinflation and unprecedented monetary easing we've witnessed since the 2007 financial crisis.
Well, let's leave it there, Wikus. Thanks so much for having joined us on the line this evening. Wikus Furstenberg is Portfolio Manager at Futuregrowth.